the ExpoReal, the post-Corona, let's call it that. We're somewhat within the pandemic still, but it's still nice to see you in person. So I sort of feel like it is post-Corona, and it's lovely to see you here in Munich. We'll be talking about nothing less than markets, mutants, and motivation. How are things going to continue in the future with an industry that has a certain amount of uncertainty, but they've come out of that uncertainty very quickly. We have a wonderful panel with us today. First of all, I'd like to introduce Gertrud Traud. She is the chief economist at the Helaba Bank and one of the most well-versed economists who works with the capital market and real estate market and everything in between. I'm pleased to have you with us this morning. She'll be giving us the keynote address this morning. You have the floor. I, too, am very happy to be here with you today. The title of my paper is People, Markets, Mutants, What the Pandemic Has Changed. So first of all, where can I put my mask while I'm here on stage? And the organizers have given me my very own microphone. Thank you very much for that. I'm happy to take that home with me as well. And the third point I'd like to make, before I turn to my presentation, I have brought along 3 topics for you today, and I'm going to explain them to you when I go through my presentation. But this is what the topics are to break the ice. Charts can be rather harmless, if you like, sometimes. So we went through a recession. The real estate market hardly noticed it because it was a different type of recession. It was a recession which was made by politics. All of the other recessions that we've been through, or others have been through, were recessions that were caused by or were followed overinvestment. This usually goes hand in hand with a credit bubble, and a credit bubble is often there on the real estate market. So that is a major difference. This time, there was no real estate bubble. Well, I'm going to weaken this somewhat. Apart from China, neither in the U.S. nor here in Europe. I wonder what the other speakers will have to say. Well, we did have a recession. The politicians were turning this on and off, and we called it the lockdown. My second point, China, and I just mentioned that word a minute ago, China is becoming more and more of a model for the Western world. Politics is becoming more important. The economy is just basically being towed by politics. We saw this in the lockdown. Think about the first quarter in 2020. That was when China had a very restrictive, authoritarian lockdown. We thought, oh my goodness, that is a very authoritarian way to go about it. But now we've gotten very used to new regulations and restrictions, which are China light, so to speak. So this is going to be very exciting to see what the coalition will be here in Germany. And I'm glad that one of the parties that's friendly to industry is part of these negotiations. And this also seems to be the case here in Germany. So the question is, markets, do we need this? Do markets, they are evil. Markets, well, we can all do that better than anybody else. And the new belief, the new mantra in theory in part is modern monetary theory. So in other words, the belief that with even more money and an expansive monetary and fiscal policy, you will be able to achieve everything. You can control everything just like you want it to be. And allegedly, there would be no price to pay for this. That's what I said about 6 months ago. People looked at me and said, they said, well, that's the way it is. There is no price. It seems to be appearing that the price is going up. We're talking again about inflation, and that is exactly what the price of modern monetary theory does, because the belief in the modern monetary theory is that with more demand, you can control anything and everything, and supply can be so elastic and flexible that it will go along with this supply policy. That's not what we talk about these days. We talked about that in the 80s. The underlying conditions should be made attractive for the companies. Well, they say that's only the zeitgeist. We can control demand, and then, of course, you will come up with the supply. But that's not the way it is. And we can see that. We can see that in all sorts of different industries. We can see that the Keynes theory, the Keynes model, is coming up to its limits, but the zeitgeist has not arrived yet. So it's improbable that with the coalition negotiations, we will probably not see tax cuts. We should be happy if there are no tax hikes, because the zeitgeist hasn't gotten that far yet. Now, the impact of these new ways of thinking is something I'd like to show you with some charts in just a minute. And what I'm saying now is we are at a turning point. Inflation is not like what the federal banks are saying. It's not just temporarily higher. We are moving on to a higher path of inflation because supply is not as flexible as some people would like it to be, or the government is seeing to it that it's not all that convenient for the companies as would be necessary for companies to expand their supply. The recovery was gigantic worldwide. You can see the collapse and recovery. This is a speed that we never had before. It's no surprise, because if there is no credit bubble beforehand, and if all you got there is the companies and the consumers were hindered, we were told we could not produce, we could not consume, so this is all pent up. And if you also have additional economy stimulus packages, then there will be additional demand. And then it becomes very clear that with a given supply, the curve will move up very quickly. If you come up to this small peak at the top, is it going to continue like this? Can it continue like this? Is the supply flexible enough? And you can say, no. We're talking here about supply or delivery problems. We managed to get the Suez Canal opened up again where things were stuck for a while, but we can see that it's not only the semiconductors that are a problem for the automobile industry. In some companies, we still have reduced working hours, and this is not because they don't have any orders in their order books. The problem is that we have the precursors that are missing. We have restrictions in terms of supply, both in terms of the materials and what we economists call the production factor labor. And that is why I think the downward trend of invention that we saw in the last few decades has come to an end, and that in the medium term, we are going to be seeing ourselves on an upward trend. You can see the problem quite nicely here. The overdemand, I've got a lot of charts that can show you this, but one chart shows this very clearly. the mood has changed drastically. And you might even think that's because there's a drop in demand. But take a look at the three lines. You can see the mood in China. Their mood at the companies there is not that good and hasn't been for quite some time. And that's due to the fact that a lot of companies had a lot of easing up right after the lockdowns. They had a quick upwards trend, then there were restrictions once again. And then we have the new mantra in China, that is to say, showing companies who is in charge. And then all of a sudden, the CEO at Alibaba disappears, then he comes back. That I'm sure you heard about that. That's why I'm going to be a bit more modest here when it talks about the real estate restrictions. I see the risks in China. You probably heard about Evergrande as well. And the Communist Party and the effects have been allowed by the Communist Party. These are things that we had in the Lehman crisis, for example, because the concession that the Chinese system cannot cope with this any better than we can. The Chinese system put a lot of money, they have a lot of money, and they can control things. But in the companies, you can see very clearly we're showing you the way forward. And you can see this in the mood in China. It doesn't look all that good, and we also saw that in the stock market this year. In Germany, the mood in industry was excellent until we had some real bottlenecks in delivery, and this led to the recession. And you can see the difference between production and orders, and everyone's worried about not getting any orders anymore because the figures that came in recently were weaker, but there is a gap, and this gap is a backlog, an order backlog that goes well into next year. That means that we will not see much growth in industry in the near future because a lot of companies are suffering from these problems. But the order books are there, and they're not going to disappear. So growth will be shifted to next year. In construction, the situation is different. This sector was not really affected at all by restrictions, so there was no downturn in construction. This is our forecast, somewhat modest in the short term, but in the medium term, back on a growth course. All of the packages, the economic packages, and here you can see that Europe has fitness programs, more than 750 billion euros, half of which are a gift. And many countries are not even taking out loans because the amount of money I've just been given as a grant, why should I take on a loan with restrictions? Companies such as Spain and Italy are benefiting the most based on their GDP. Greece as well. Germany is getting about 25 billion. The first tranche has gone to Berlin already. It has been received in Berlin. It was about 1/10 of the total package. So a lot of money from Europe, and a lot of this money is going to the real estate sector, because restructuring of industry with more sustainability, construction investments. I'm sure you'll see this at every other stand here at this fair. And accordingly, we also expect these packages, which are now beginning to take effect, we expect that there will be additional demand. In other words, no restrictions when it comes to demand. The restrictions are with supply, and you can see that the prices have been going up for many years now. In Italy, it's been more modest, but in Italy, it's important to have a look at the European Central Bank. And the European Central Bank will not be looking at our economy because then they would have to increase interest. In some cases, inflation is restrictions, I've just been talking about goods so far. But we also have other restrictions due to structural factors. And one factor was available or visible before Corona, but it was superimposed by Corona. We have restrictions because we have a shortage of labor. Restrictions because of the aging population, and this is especially pronounced here in Germany. And you can see this is not quite as pronounced in Italy. Again, let's take a look at the European Central Bank. They want to keep everyone on board. That's why the ECB will behind the curve. The interest rates now. Well, interest rates have reacted to the change in underlying conditions. See the downward trend over the last few years, and this trend, I don't want to say that it has reversed, but the trend seems to be interrupted now. Although we can assume that the U.S. Fed and will follow other central banks. We've seen this in Eastern Europe and in Norway. There have been interest rate hikes, and these have become an issue again. The Fed will begin to taper, and the first interest rate step will be taken the end of next year. The markets anticipate this, but they know over a year's time is a long time, so they're not really all that nervous yet. And in Europe, much less so. And because Christine Lagarde is still saying again and again that an increase in inflation is only temporary, and you cannot know that until the middle of next year, because then the base effect will be seen by Germany now that we've talked about VAT, and we analysts, we have discussions with the European Central Bank, and we know that the market can count on the ECB because they've got more influence. And unlike the past, they are also taking their bond purchases, so we see that the long end is rather relaxed. And the forecast for interest rates, both here in Germany, and there is also a consensus here, we will see that there will be a more moderate increase in interest rates. Nonetheless, we believe that we have hit bottom. Real estate markets. Here is an overview. I've only got annual figures up until 2020. Germany was one of the major real estate markets, and in 2021, we see negative figures in 2021, but in the first 2 quarters that there has been an improvement, but especially in Germany, the real estate market made it through the crisis very well, the Corona crisis, that is, because in this sector we had relatively few lockdowns, and when I say relative, fairs couldn't take place, hotels had to close down, all sorts of things which were impaired. But overall, you can say that when I say overall, the residential real estate market did very well. There is still great demand for residential housing, for office real estate. We don't expect a collapse due to the orientation towards home offices, for working from home. So we will see new equipment in offices with more spacing. So we won't have people crowded into offices anymore. We'll see more spacing, and we will see innovations, changes, and that is why we are not as euphoric as we are for the residential market when it comes to office markets. There is a distinction between the top locations and secondary locations. When it comes to logistics, here there are no figures there, but this will continue. And one thing is clear, we've gotten used to the fact that things are being delivered, and of course we will stick to that. It's convenient, and convenience is something that people like to get used to. Retail trade was a problem before Corona. The food retailers or other major shopping centers focusing on groceries but selling things such as appliances, TVs, etc., they, of course, they boomed because the shopping malls were closed. Shopping malls. There was an oversupply overall, and that is why you can see a downward trend, and this has been ongoing for several years. But there were winners during Corona. That's where there were no restrictions. Now, the residential market, we are optimistic, actually very optimistic, because not enough is being built. And I'm quite surprised, actually, during the campaign, they don't build themselves on their own. You need people who can put them together. And the last figure, which I just updated this weekend, on Friday, we heard the most recent construction costs. Of course, excess demand leads to an increase in prices. And you're all familiar with the announcements. It applies to wood, steel, all sorts of products. It's going to remain that way for quite some time. You can see the ratio between wood and steel. This is an outlier, so to speak. And I'd also like to criticize politics once again. It's not the evil companies who are raising prices. No, it is the major demand and regulations. The increase in demand will also take all of these into account. And as politicians, you need to know that if demand is greater than supply, then this is a signal for the prices. And if you take a look at the increase in prices, or if you prevent the increase in prices, you're not going to get rid of your overdemand. Office space. Of course, interest rates are important here, and the difference when it comes to yield compared to interest rates, even if they do go up slightly, as I have forecast, still there will be a positive gap. In other words, office real estate will remain interesting, even if, all in all, we will see a slight increase in utilization of capacity. But compared to what we're used to, take a look at Frankfurt. For many years, it was quite normal for the vacancy rate to be 14%. What we will see, and I implied this a minute ago, there will be a differentiation according to top situations, secondary and tertiary locations. And this, of course, will drive the total development of vacancy rates upwards, but only slightly. Because, as we said before, the economy will continue to function, and despite Corona, we see that there is an increase in employment figures. We haven't seen this in manufacturing because the lockdown was very restrictive, and in gastronomy it was a disaster, the lockdown that is. But in other industries you can see that there continues to be demand, so economy and office development go hand in hand. That's why I remain optimistic. Retail is an issue worldwide. Too many shopping malls worldwide in many countries. That's why most countries have shown a negative performance. But that's nothing new. Now, to conclude, another market, because the share market reacts very quickly to new trends. a great performance by the share market since the spring of 2020 because the economic recovery was there, and until the delivery restrictions took effect, we saw that there was a clear expansion of the valuation. But you can see it's not the performance, it's the valuation based on a number of different indicators. The share markets were quite expensive, especially in the United States, but also in the Eurozone, and slightly expensive. So if the markets are overly expensive and there are storm clouds on the horizon, then the share markets react. And that's exactly what is happening right now. The question is, how many restrictions will there be for companies? To what extent will the prior production have an impact on our margin? We think that this will take some time. Our forecast for the end of the year for DAX is 14,500. So you can see we are still somewhat moderate here, but this is still an excellent performance for 2021. And at this point, I have come to the end of my presentation, and I'd like to hand back over to Mr. Just. Okay, you're going to discuss with us? I think we need another chair up here. Maybe we can have another chair up here because I have 4 excellent speakers on the panel today. First of all, Sabine Barthauer from DZ Hyp. She's a member of the board there quite recently, but she is an esteemed partner here. I'd also like to welcome Dr. Susanne Hügel. She is head of digital innovation at CBR Ellis and also very active throughout. And then I'd also like to welcome Klaus Thomas, who is CEO at BNP Paribas Real Estate Investment. Thanks for coming. And then Andreas Mattner, who is the president of the ZIA and managing director of the ICE. And that will bring me over to the edge over here where I get the biggest chair. And I have you all. I can see you all nicely. So the first thing that we heard from Gertrud Traud was all positive news. And with every chart, things got less positive. Ms. Barthauer, how do you see it? Banks always have a certain feeling for risks.
Well, I have to say that lots of the topics Ms. Traud explained basically apply to the whole market, are fundamentals. But we also see that the pandemic had a different impact on different asset classes. And all of the asset classes have to adapt themselves. So if you start in the residential market is very strong in the market. There's great demand from investors for the residential market. But we see differences. On the one hand, the trend towards slightly larger apartments, particularly for families who make long-term plans, also to include a home office in which they can work at home. But we also see the effect of demography, which means that the number of one-person households is increasing. And this means the demand for smaller apartments is increasing. And another topic which is very important for our society, social housing. We must provide sufficient space, housing, for income brackets which are not at the top of the range. As far as the office sector is concerned, well, the economy is growing at the moment, and as Ms. Traud said, we see positive signals coming from this part of the market. But we also see that there are structural changes coming up, because many people say home office will remain with our company. It's got something to do with corporate culture. They will continue to offer teleworking, and it's also got something to do with acquiring young talent and retaining it with your company. And this means that the share of desks per capita for employees of a company will decrease. And this is going to have a long-term impact on the office market. We are observing it very carefully. For the retail trade, I think I don't need to talk about it in detail. You are familiar with the situation there. And in fact, this year we saw the first real estate or shopping centers, shopping malls that are taking care of these structural issues, where they are planning to use it for different purposes. And the shopping areas on the upper floor are now being converted to offices, and that means a different structure and long-term use for shopping malls. logistics, there are two aspects. On the one hand, online trading, which has become part of our lives because it's so convenient. All of us have got used to it, and we definitely don't want to go without online shopping in the future. And the whole topic of supply chains is very important. So as far as the logistics market is concerned, we see great demand. Okay, now I have to wait until this announcement is over. It's quite loud. Okay, we speak louder. How about that? We can do that. We can be louder than this announcement. Okay, logistics. This is what I just said. This is the asset class which wins and which I believe has positioned itself very well for the future. Excellent. Who would like to shout next? Mr. Thomas. Well, actually, this was a survey for commercial real estate was quite positive this year. This was not really explained, but in the investment and rental markets, it's working quite well. Of course, the challenge is if you want to invest your money in the future, you want to find the necessary products, and you have to take into account all of the factors. And the pandemic was a kind of catalyst or accelerator here. Let's start with the sector which suffered most. Retail was in a crisis before the crisis, or before the corona, and something has to happen. And for CEAs, that's a major topic. It might be positive because it's clear that everybody's got to do something. Not only the real estate owners or users, but also the municipalities have to make sure they bring life back to the inner cities. That's just one example, but hopefully this is going to open up a new opportunity for the future. Have to be more flexible, and they need the money for things that were not clearly identified as a future, a lease contract maybe, but this offers opportunities. Many of the sectors were mentioned before. The winners of the crisis was residential market, logistics, and there is demand for housing. But how about the regulators? What are they doing here? Prices are increasing, even if the rents can not go up accordingly because there's a cap on rents. So that makes investment difficult. And let me just add another sector which we had in the past, but which became stronger because of the pandemic, and we're also quite active, healthcare. Starting with assisted living and clinical housing, this is a sector which over the past 10 or 15 years, and this is typical, became not a niche anymore, but became mainstream. So healthcare is a new sector which developed strongly over the past 2 or 3 years and was accelerated by the crisis. Thank you. And from an association point of view, what were the major topics, and what was the regulator here? Was it the partner? Was it a partner? Banks said sometimes they behaved like a partner, and now they're no longer a partner in this whole business because they are now imposing restrictions again. How about the real estate market, the construction sites? Did you have to struggle a lot? Well, that's nice. It's calmer now as I speak. It's not so loud anymore. Now, the regulator was a difficult partner sometimes. But let me start at the beginning. Ludwig Erhard once said 50% of economy is based upon psychology. And the previous speakers were responsible for the other 50%. And I'll be bold enough to say now we are back on track in our industry. And I'm very happy that you are here because this is a visible sign. And I really notice that everybody whom we need is back on this fair. And I'm very optimistic since I see you here. But still, I cannot overlook the fact that retail and hotel were actually in a very difficult position. And I really don't understand why we had the longest lockdown in history for 6 months only in Germany, if I compare our country to other states, why we allowed ourselves such a long lockdown and in this way created lots of problems for these sectors. But the problems are over. 2 weeks ago, I went to the European Hotel Industry Summit, and I found that there too, even there, they are now becoming hopeful again. They have hopes in the future. The banks are coming back as far as financing is concerned. Project development is starting up again, not only in the leisure industry area. The leisure trade, because of people going on holiday again, is prospering again, but also for city hotels. The same applies to the trade, to retail. We have the large chains, our tenant partners, and we offered support programs and also compensation for damages, and we supported them. And in Europe, we see at the end of the crisis, we offered a lot of supports because we discovered this clause according to which damages can be paid, liquidated damages, and this means that our tenant partners with whom we cooperated in the past are now on board again. So I am optimistic. We are slowly recovering from this very future. We are really back on track. And for the regulator, sometimes we had to help them find out what needed to be done. And it was not always easy. During the lockdown, we had to influence just parts of the areas that were impacted. Otherwise, we wouldn't have such a long lockdown. And we had really strange clauses, like a rule which only applied to shops below 800 square meters. And now we have the 3G regulation for hotels, which I don't understand. A hotel is a safe place. A face mask should be enough. And I'm shocked to see that Mr. Wheeler and the Federal Minister of Health only now declared the pandemic is over and vaccinated. This is not how it should be. No, we should really look to the future with confidence, and together with the government, with the new federal government and all of us, we should really make sure that we drive our economy so that it can take off again. Ms. Barthauer, we have the German debt project by the commercial funding for real estate, and we called it back to business because we had the impression that the credit institutions said we are back in the business, we are not going to finance everything, so it's not business as usual, but back to business. So they do offer funding, very comprehensive funding, and this would support Mr. Mattner's optimistic attitude. That's right, the real estate industry is back to a more normal situation, and the economy is recovering. And that's exactly what investors are doing. They look to the future and say there is demand. And there's demand and there's liquidity because of the current situation in the capital market. That's what we saw in the slides. So the difference is still big enough so that real estate still remains a highly attractive form of investment. And as a consequence, there are great opportunities for funding for the institutes, for the banks. And this is competition. So we are definitely back to normal here. Well, one major story in the pandemic, Susanne Hügel, was that all of us would have the digital quantum leap. When I look at my son, he had to do homeschooling. That was digital. But it was really a step back as far as homeschooling is concerned, a step back in terms of digital. But how about the real estate industry? Now, during a pandemic, we saw that there are new opportunities and there's potential for working digital, but it also showed deficits, both for homeschooling, for education, and also for tracking in our health system. Well, the health offices found it very difficult to track people. Documents had to be sent by fax. And we discovered that we have lots of weak points here in our healthcare system as far as working in a digital mode is concerned, and also digital at the workplace. There's something that needs to be done. And the Digital Index 2021 is an interesting study. It reflects the level of digitalization in German society. It showed a slight upward tendency across all sectors, but in terms of healthcare and education, we have weak points. And workplace, anything related to the workplace, we had an enormous increase in digitalization. It's because everybody had to work at home, and this was necessary. And because of this, virtual collaboration and communication tools had to be used. And this meant a major leap forward in digitalization. And there was a second aspect to it. People were allowed to make mistakes. There were some people who were pioneers, forerunners, because they had actually worked digitally before, and some used digital formats for the first time, and it was okay to make a mistake. And this culture of allowing mistakes actually was good for the real estate industry and the other industries, and for the real estate industry itself. At this point, particularly in the second lockdown, the big question that arose was, it's not just a matter of business continuity, but how do I address not only communication issues, but also the core value chain? And we found that in many prop tech or tech solutions, they offer added value. So anything related to back to office or workplace technologies or booking systems, or how can I make sure that distances are kept? There was a tremendous demand for this. But these were solutions which we actually had before. But all of a sudden, they were in demand, so it was a catalyst. Anything related to the cloud, for instance, also experienced a major boom. And that's exciting because digitalization refers not only to one asset class, but it's across the board, all of the phases of the life cycle, and also affects how organizations are structured and how they work. But if you think about it the other way around, if the pandemic had happened 10 years earlier, we would have found it very difficult to cope with the situation. But one good message is that the major break or decelerator was in people's minds with employees and managers. As you said, we had all of these technologies before, but now they had to use them. And it was possible. All of a sudden, everybody was flexible enough to use these technologies. So that was my lesson learned. Okay, look, we can do it. We can be flexible enough if you want it. Those who were concerned, the skeptics, actually didn't have a choice because of the situation. Now, what is your experience with digitalization? What are your major projects? Let's start with Mr. Thomas. Well, I will confirm it. It was really as a test for digitalization, we had all of these concepts before, but all of a sudden, all of this had to work. And this is something that nobody could foresee or plan for. And nobody would have thought it would actually work as well. And we were lucky because by coincidence, we established mobile working in our company just before COVID. We had rolled out laptops for everyone. So within the company, it worked quite well. But the question was, if the whole of Germany sits in front of their computers, are the data networks going to cope with it? And I thought it was quite astonishing that video conferencing, in terms of the data volume and in terms of quality, actually worked. So here we were lucky. In our company, if this had happened 1 year earlier, we would have had many more problems. So we were quite lucky here. But again, this accelerates the whole story. And as you said, the most important thing is people's minds and attitudes. That's something I heard from colleagues in the sector. If you have to sit at home all day, you just sit in your track suit and you sit on your couch if you are at home all day. But that was not the case. Our experience was that our colleagues worked more than ever before. Everybody wanted to get their computer up and running at home and did their additional work. Additional work was required, of course, during the pandemic. So a lot of commitment was required, but at the end of the day, it worked very well. And for the future, it also offered lots of new lessons. People didn't have an alternative. They had to do it, right? And also, they didn't have any alternatives to do something else because everything was locked down, closed down. Nobody could have done anything else. Now, what has been your experience? Ms. Martner, Ms. Barthauer, what projects were kicked off that would have been suspended otherwise? Well, actually, we already had quite a lot in store. 7 years ago, we said we need to push innovation topics, and digitalization was certainly one of them that we identified. And together with SAP as a system partner, we built up structures. And our members also contributed with their own content within their own companies. So we were prepared for this. One thing that didn't really work very well is the Federal Republic of Germany or the federal states in Germany didn't really support us very well. A digital administration which works very well in Baltic states, we don't have it yet, not in the way other states have it. So this is something that the former government was responsible for, but now we have expectations of the new government. If the new government has not understood the new coalition, if they don't know just how important digitalization is, I really don't know whether they are actually doing their job very well. I'm convinced that we are going to get digitalization in administration and that the granting of permits works faster. And it's only indirectly linked to digitalization, but in 1990, we had 5,000 building regulations, and now we have 20,000 regulations for buildings. That is not acceptable. So this is definitely something that needs to change. And it also meant that people's attitudes changed. People's mindsets had to change. We had to adapt ourselves to new discussion forums. In our studio in Berlin, we actually broadened the concept and included several stations. And actually, we cope quite well in the different companies. And the asset classes, which were mentioned just now, can make progress with digitalization. For instance, the retail trade. Not everybody has to convert the upper floor into office space. No. If you already tried to move towards a digital mall before, when e-commerce and the retail trade might be combined with nice restaurants, then you can survive in the market, definitely. And the same applies to the real estate. I think we are right in the middle of a process where the pandemic has identified new opportunities, accelerated some developments, and also offered some good things. Ms. Barthauer, what is your favorite project? From a bank perspective, I must say, as far as private customers are concerned, we are quite digitized. Over the past few years, we invested a lot in digitalization, and the next step must be commercial or company, corporate customers, whatever you want to call them, because we found that during the pandemic, in which we worked almost exclusively digitally, only 10% of our employees actually went to the bank, and without we kept operations up and running. Nobody noticed the difference. And in the communication with our customers, we also found a higher level of digitalization, which has an effect on communication and the exchange of documents and the entire process. So I'm absolutely convinced that our corporate customers or commercial customers will be the next area where a higher level of digitalization will happen. And I think that's only advantageous. It makes processes more efficient and makes transactions faster. So that's one of our next major projects. Ms. Traud, I have a really difficult question. Now, economists, when they make their estimates, it's always difficult to identify the productivity benefits from the internet. They search and they say, no, we can't find those advantages in terms of productivity. Are their calculations wrong, or do we surf too much on Facebook? Now, the problem is that in the initial phase, in terms of people's mindsets before COVID, people always thought that digitalization was a threat, that it was going to kill jobs. That's what people thought. And the productivity advantages and innovations were not factored into the equation. And only because this happened in the past, it doesn't mean that it's going to also be like this in the future. But we have come to this threshold where some jobs will be eliminated, they have not gone yet, so people are still afraid of digitalization and its effects, but the new jobs emerging. To be quite honest, somebody who works with social media and IT and digitalization, if an expert for these matters or for these disciplines is sought-after expert and can earn a high salary. So we are going to see increases in salaries, and we are going to, with a certain delay, also see increases in productivity. But this always takes a while, because what should you measure it against when you talk about services? In services, you look at salaries and wages, and if salaries and wages increase, it will happen. And what about real estate professors? How about you, your salary? You mean added value or the salary? No, difficult topic. And in German accounting, we always say when we increase productivity, we also increase our costs. Okay, now, important topic. I expected in the opening panel that 2/3 of our discussion will be about ESG. Well, sustainability is a topic. How important is it for you in your business? Ms. Barthauer, is ESG really the most important topic, or is it just my impression when I talk to people? No topic. And I think in terms of project development, this is something that we've seen for quite a while, and it's extreme. Large real estate or property in large cities must meet sustainability criteria, and they just need to see which label or certification will actually apply to the building once it's been realized. And for the credit process in the banks, ESG is also important, because the regulator identified it as an important topic with Basel IV. I think after equity and other topics, this was definitely one of the important topics on ESG, but now it's become so much more important. The EU taxonomy and EU regulations are also important priorities for the banks. And it is a catalyst for digitalization because data need to be collected so that the classification of existing billings and of new billings will be made possible, and classification of customers. So for this, lots of data will have to be processed. So it's a major topic, which, however, the banks are going to address together with the customers. And it's certainly not just a short-term objective, but it's something that we will have to deal with over the next few decades or in the future in general. Mr. Thomas, are customers ready to pay more for this, for ESG? Well, do I have to pay more for ESG or for sustainability? That's always an important topic, but I think it's the other way around. In future, if you don't cover all of these criteria, and if you don't do this proactively, then later on you will have to accept a discount. So, of course, you have to invest a little bit more, but if you don't do it, at the end of the day, you're going to lose even more money because at the latest, when you sell the property after a couple of years, the next buyer is definitely going to take a look at it, your ESG criteria, and that's the challenge. And it's coming back because before the COVID crisis, there was this trend already. Then it was interrupted for a couple of months because people were dealing with their own problems. But since mid of last year, this is really coming back very strongly because this is now being reflected in regulations. Many companies have been doing this for many years proactively. The regulators are now also taking steps, and there's no way back. You have to be one of the front runners. You have to be at the forefront because if you haven't started or tried out ESG before, once the regulation comes, you cannot cope with it. But you need data, Ms. Barthauer. Which data? Definitely data, and you can only manage what you can measure, and that's why data is required, so that you can actually prove that you meet the ESG criteria for a specific property. And one simple example is energy consumption. This kind of data needs to be collected on a regular basis at a high frequency. And you have to have transparency of this data. So for the next few years, transparency will become tremendously important for the real estate industry. And if you don't start at an early stage, because we have climate targets, and they are now even more stringent from 2050 to 2045, the climate pledge was signed by our company, and we have a voluntary commitment for 2040. We want to be climate neutral by 2040. And if you don't start now, you can never do it because sustainability at the push of a button won't work. You need a certain lead time. And now we're going to get the so-called traffic light coalition in the German government. What are your wishes for the next German government? Let me first of all come back to ESG because I want to share a message which is important to me. You said it's very important, but I would like to emphasize it even more. To all the project developers, if you don't develop according to ESG criteria in the future, nobody's going to buy your property. And anybody looking for a tenant, most of them already made a commitment that they're going to only rent property which meets ESG criteria. So it's really tough. We have to change here. But I'm also optimistic. I believe that in our companies, we have been thinking ESG for quite a long time. I'm honorary president of my company, and for 10 years we have had an ESG council in our company. And of course we observe the criteria. And there's another message I would like to share with you. It relates to politics. ESG is not just E. Not just E, because right now only E criteria were mentioned. It's also S and G. And we are really proud that we are the only association which has a code with the German Tenants Association, and also with the we also have a certain code for commercial real estate. Certain criteria are laid down here, not only E criteria, but S and G. S and G, governance, you know that, I have known that for quite a long time, but also S. So we are well prepared for a discussion with the new federal government because in many ways such criteria will be emphasized, will become even more powerful. I'm going to stick with E, otherwise I would talk too long. I believe all of us together are very well prepared for CO2 prices, for implementing CO2 prices, because we've been looking at this for quite a while. We know how it should be done. But now we have to finish the process together with the federal government, because we need to see how to pass on these costs to the tenants. This has not been regulated here. We don't have any regulations, but we have ideas how this could work. So the idea is to share the burden 50-50, or you have to think very well how you should do it. And first of all, you need to see to what extent real estate has been revitalized. And this is something that needs to be taken into account. So these are important topics that we will be discussing with the new federal government. And I'm really quite optimistic that in our sector, with the new government, we are going to really make progress. Thank you. Last question to Ms. Traud. Apart from politics, the ECB also said that they would like to save the world. Ms. Lagarde and Ms. Schnabel made it quite clear that they are thinking about instrumentalizing interest rates according to the premises of climate policy. Is it a good idea or not? Anybody who studied economics, you might remember the old Tinbergen rule. One instrument for one target. Otherwise, you have the problem of conflicting targets. Only one instrument for one target. And until a couple of weeks ago, the ECB was not exposed to the problem of potential inflation. Quite on the contrary, the ECB was convinced that at least 2% inflation were necessary. So the idea that they should fight inflation was not present in many of the minds of the people at ECB. But if I'm right, and if inflation becomes an issue for ECB, then ECB is going to have conflicting targets. And then the ECB will have to make a decision, and it has a mandate. And the mandate is stabilizing the price level, stability of the price level. And if the ECB also focuses on sustainability or ESG, I mean, they can do it for their own investments, but we actually share the work here. So ECB would then also play a role in fiscal policy, or government would intervene with governance or fiscal policy in a society, but then it would exceed its authority and could no longer meet its original target. And they couldn't just justify their actions by, we don't have time to keep the interest level stable because we want to save the world. Well, thank you, ladies and gentlemen. We don't have enough time left. I would like to offer the audience to ask questions, but because of COVID reasons, it's not possible. Now, I would have said governance reasons before, but because of COVID, we cannot offer the audience to participate in the discussion. But we had such a wonderful panel here with all of the panelists, Ms. Tinbergen. I'm glad you mentioned it. If I can certify that you still know everything about economics you studied in university, you heard a couple of positive statements and also critical statements, and I'm Tobias Just. Thank you very much, and I wish you a great fair.